And oftentimes people want to get into real estate, I think, for the wrong reasons, because they can make money. So they go into, fix and flips, or maybe they're non-accredited, right? So they're doing single family rentals or something like that. And they shouldn't necessarily be active investors. Maybe they would be better off identifying what their unique abilities are and creating value that way, and then investing their capital in real estate.
Have you been thinking about buying your first rental property for some time, or do you already own a bunch of properties? Well, fellow investors, you found the right location to listen and learn from others' successes. Welcome to The Very Real Estate Effect with your host, Axel Monsaingeon.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in all of North America. And today it's a pleasure and an honor to have my friend Dave Wolcott, the founder and CEO of Pantheon Investments. Hi, Dave. Welcome to the show.
Hey, Axel. Really grateful to be here to connect with you and your audience.
Man, I'm super happy that you're joining. I've been looking forward to this moment. Before we get into it, I just want to remind everyone, you will want to share this episode with a friend who could benefit from this conversation. Dave is a master at building wealth, and this is what a lot of us are looking to do in 2025. So share it with a friend who could benefit from this conversation. Now, Dave, how in the world, this is a real estate show and we talk about real estate, and I know we'll get into it, but you've developed a blueprint on how to build wealth. Like, how did you start with all of this?
Yeah, so great question. Really, I grew up in a middle-class family in Connecticut, and I was told that the recipe for success was to go to school, get good grades, you're going to get a great job, and life would just kind of work out for you, right? So I followed down that path, and went to school in George Washington University in DC, and then had the opportunity to actually do the ROTC program, got into the Marine Corps, and served my country for 4 years and learned some amazing things there. They don't teach you anywhere else, Axel, things such as leadership, teamwork, and integrity. Yeah. And after that, I transitioned into the corporate world, into the tech industry. And at the time, we had an 18-month-old. And then on October 24th, 2000, we literally had triplets and quadrupled the size of our family, like overnight. Yeah. And I got to tell you, Axel, like when I was holding 3 babies in my arms and looking at them, it was so clear that just providing for financial security for my family was just absolutely paramount. So the first thing I did was I went and talked to my financial advisor, and he told me the same thing everyone else told me, right? Which was max out your 401k. You've got kids, put money in 529 plans, right? And just put everything into stocks, bonds, mutual funds, right? So at that point, I knew that building wealth didn't involve being a retail investor in the stock market. So I set out on this obsessive journey to really uncover how the 1% were building wealth, right? And I started investing in, like, on the real estate side, everything from a single family to retail to raw land to office parks, you name it. I also invested in alternatives such as oil and gas, private credit, and other asset classes. And, fast forward 20 years, I did super well doing that, and then really created Pantheon to just really help other people how to figure out what this blueprint is to build wealth. Because yes, you're a real estate show and we're talking about real estate, but most people are getting into real estate because they want to build wealth, right?
Absolutely.
But that's one, real estate is just a vehicle. You need all of these other components to really do that.
Mm-hmm. Well, thank you for sharing your story and how you started. I look forward to getting into it. And you're absolutely right. Like, most people get into real estate because they've heard, like, oh, most millionaires got there because they own some kind of real estate. And so now it's like, okay, well, can I, I'll buy a duplex, I'll buy a triplex, and something like that. Now that does work out, and there's fabulous opportunities to build wealth. But as you mentioned, it's not just about owning some real estate. It has to be a little bit more comprehensive. And so I'd like to go back a little bit on your journey, like maybe, to hear about some of what it was like 20 years ago on your first real estate deal. And then how did you evolve in the asset classes throughout that period to end up where you're at today?
Yeah, well, so I've really encapsulated this in my book called The Holistic Wealth Strategy. And for me, what I've determined was that it all really starts with creating a vision, super clear clarity on what your vision is. Because if you don't have a target, you're going to miss every time. And oftentimes people want to get into real estate, I think for the wrong reasons, because they can make money. So they go into, fix and flips, or maybe they're non-accredited, right? So they're doing single family rentals or something like that. And they shouldn't necessarily be active investors. Maybe they would be better off identifying what their unique abilities are and creating value that way, and then investing their capital in real
Mhm.
estate, right? So I think for me, it was really clear that I needed to have a great vision in terms of where I wanted to go in life. And then it all really starts with mindset, right? And I know you have had probably countless, discussions with other family members, people you meet out and about, and you talk about what you're doing with real estate, the amazing benefits, and how to invest in the asset class. And most of the time, it's met with, my financial planner says that's a bad idea. It's too risky. How can you do that? Right. So this all really starts with your mindset and being able to really ask why and really understand things at a different level, right? And remove those limiting beliefs. And then once you can do that, right, you can create goals and habits that really support your vision to get you kind of really closer to where you want to go with your goals.
Mhm. Yeah, yeah, absolutely. Like mindset is really the first thing to be working on and, educating yourself and not necessarily going out there and quickly buying a rental house because that, you're creating yourself a job. You might create wealth in the meantime, but that's not necessarily the best way to go about it. So you started with some real estate. What kind of properties were you looking to buy at the time?
Yeah, so at the time I was actually in Colorado, living in Colorado, and I can tell you it was crazy. You got to remember this is 2000, so Rich Dad Poor Dad just came out the year before.
Yeah.
I devoured that. I read Cash Flow Quadrant, and I knew I had to become a business owner and an investor. Right, that made so much sense to me. So, but there's no step by step plan in any of Kiyosaki's work, right? So you're trying to figure out how to do that. So single family rentals kind of made the most sense. And we were looking at the local market. And quickly I realized that, I was literally actually driving around after my day job in the evenings looking at properties with
Yeah.
like four little kids, three babies and a toddler in the back
Yeah.
of the seat, right? Trying to go look at properties, and then I'd run the numbers at night. And what I found is that it is a full-time job, right? So I was just kind of trying to do this as a side hustle. And there's people that are doing this. They know the market absolutely inside and out. So there's
Yeah.
really strong competition even back then, people who understood the market. You needed to figure out the capital game on how to be able to put, equity together. And frankly, I really just kind of came to the conclusion that, especially with single family, there was just too much risk because I was doing everything. Right.
Mhm.
And then this really started to evolve, our investment thesis, which is, getting into passive investing, because I think active investing is, again, understanding really from that vision standpoint, you have to understand your own, skill sets and what
Yeah.
you do best. How do you create, if you're an entrepreneur, how are you creating, value in the world and serving your clients? And it may not necessarily be in real estate, right? It can be in, let's say, a tech business or anything else that you're doing. And then you can be investing in that. So I realized that I wanted to get into the passive investing because now I could leverage an entire team, someone who's
Mhm.
been in acquisitions for their entire career, and they know the market inside and out. They know all the players and all the loopholes. I know that people, understand, like, the debt markets like super well and can access capital, right, better than me trying to, talk to my local banker and kind of figuring that out. So for me, I think that's a really big learning lesson people should really be thinking about, is if you want to participate in real estate, understand whether you want to be active or passive. And so for me, I came to that conclusion that I would get more leverage doing passive. I would create more capital on my own as an
Yeah.
entrepreneur, and then I would invest in real estate.
And you would invest passively. So you joined some syndications on multifamily?
Correct, and this is even early days of syndications really, because this is back in 2000, so they were really kind of private placement type deals. There weren't many, there weren't even many, folks out there, so it was pretty
No.
hard, networking and even trying to get access to deals.
Yeah, it was still the fairly beginning of that whole wave of syndication, and I was gonna say democratization of passively invested multifamily.
Yeah, correct. It was really barely there.
Mhm.
So just trying to get that access, was really hard. And so I spent a lot of time creating relationships in the private equity market, and that's what I wanted to do, was being able to try to help other people get access to exclusive opportunities. And then we also started to evolve really our investment thesis into alternatives as well, because and this is a, really great lesson for a lot of people, which sadly we know too well, right? Is, with the unprecedented rise in interest rates and a lot of people that were using floating rate debt, it just, I mean, it literally shattered the market. And we're
Yeah.
still, it's still like a
Still.
ticking time bomb, right? With a lot of
Mhm.
loans kind of coming due and people kind of just scrambling. And so what we thought once was super stable, reliable asset and everything, you know, became the opposite, right?
Yeah.
So that was a really tough lesson. So what we wanted to do, and what I've studied between, family offices and ultra high net worth, is, they're typically focusing on 1 to 3 focus areas. So different sectors, right? And then you can get, specific inside of that. So for that, for instance, we focus on energy, and we also focus on private credit. And the reason we like these 3 sectors total is because they're all assets that are non-correlated to the stock market. They have
Mhm.
really strong macroeconomic fundamentals, right? Because you always need energy. Doesn't matter where you live in the world, right? Kind of what industry you're in, there's such
Yeah.
a shortage, right, of energy. So we want to be investing there. And it turns out that our thesis is correct. We haven't actually purchased multifamily for, I think, about 18 months now. We've stayed
Mhm.
away from that. We did a new development project, which was very interesting. A build to rent, brand new 380 unit condo building in South Florida, which was really unique. But in terms of multifamily, we've been very patient, kind of waiting for the market to turn.
Mhm.
But with this, right, we're able to really juxtapose whether you're looking for cash flow, tax efficiency, or some type of forced appreciation. We can really kind of have some diversification in our overall portfolio. And just think about it. If you're a real estate investor out there, I mean, we have private credit is another big focus that we have. This, that's a cash flow machine. You can get really nice double digit cash flow out of that. And, if all of your assets are tied up in real estate, PE, you need cash flow, right?
Yeah.
So having some diversification in, again, other businesses that are just driving that cash flow in, that's really great. Also in energy, now in the US, what's super unique, people don't realize about investing in oil and gas in the US, is you can actually offset 100% of your investment against active income. So you can take active
What?
losses. Yes, it's huge.
Whoa.
Yeah, it's huge.
That's really huge. Okay, let's dive into this a little bit. Let's understand exactly what that means. Like, how do you invest in the energy sector?
Yeah. So what's really unique about energy, Axel, is that they have what's called depletion costs and IDCs, or individual drilling costs, right? That you can basically offset your active income, because it's oil and gas is a depleting resource, right?
Hmm.
So these intangible drilling costs, you're able to use as that tax offset. And then
Okay.
typically what we'll do, like our latest fund, is we actually invested in just about 50 different wells across the country. So we were mitigating really our risk by having diversification across wells. And then we're also buying into some existing production with big producers like ConocoPhillips and the big guys, right? So we have a mix of new production, existing production, and then you can get a return of capital very quickly. But this
Okay.
is a very popular strategy for, again, if you're high income, especially W-2, or even if you're a business owner, right, and you have a lot of income in a year, this is a great way to offset it. You get a nice tax break, and there's very healthy returns, very much on par with real estate as well. And again, when you think about it from a diversification standpoint too, having some investment in energy, is really a really great play.
Oh, wow. Okay. And so, to be able to invest in those wells, you created a fund. So you've been syndicating and taking outside capital and then plowing it back into those 50-ish different wells.
Correct. So oftentimes, what we usually do is we're working with very large partners. Like in this case, they've deployed 3 billion in capital. The minimum investment is 10 million to get access to these opportunities. So what we will do is usually create kind of a sub fund.
Mhm.
And then, and we'll raise, up to 10 million to then invest in it. And then our investors are able to get access to that.
Very good. And then, so then, as your one of your other areas of focus right now, you said personal credit. What do
Yeah,
you mean by that, and how do you invest in it?
Yeah, it's actually private credit. So if you've ever heard of merchant cash advances, which it's really interesting. This whole space has a combined annual growth rate of over 20% for the past 15 years. Because, like, here's a great example. I live in Florida, and we had these big hurricanes this fall. You got these roofing companies that basically have a 3-year backlog of work.
Yeah,
I mean,
yeah,
these
yeah.
guys are making so much money, but they need additional truck, they need additional manpower, equipment. If they go to the bank, it's going to be 6 months for them to get financing. We can
Mhm,
underwrite their financing within a week. They pay us back within 7 months. Now they're paying a premium for that
mhm.
capital. However, they've just unlocked an entire new, revenue stream
Yeah.
that they can actually capture, and investors make a very healthy double-digit return off of that. This has been a trend. Again, by the way, how I came across this is because this is what billionaires and ultra high net worth are actually creating a nice chunk, maybe 10, 15% of their overall portfolio to private credit, because it's very steady, high return yield in terms of cash flow.
Okay. Very interesting. Makes sense. And I like the example because that's very relatable. You're right. Those roofing companies, they have years of work ahead of them. I wouldn't say risk free. It never is, depending on the operator. But they're going to be able to generate revenue to offset that loan.
Yeah, correct. And they've averaged, I mean, this sponsor that we work with, they've averaged a 6% default rate over the past 7 years. And that even includes during the pandemic. So there are some defaults and
Mhm.
things like that, but most of the loans are like collateralized. And then we're even taking in payments like before they get paid. So their clients are actually paying principal and interest on a daily and weekly basis, and we get
Wow.
the first cut of that before they even get paid. So,
Mhm.
yeah, it's a great place to be in the food chain.
I love the evolution that you've had from real estate, like starting with when the triplets were born, and you realizing that you had to be a little bit more systematic about building wealth. You've evolved out of the real estate into some more exotic and alternative asset classes in terms of investment. For those who are listening and might be at the beginning of their wealth building cycle, what would be 2 or 3 pieces of advice you would give them that's actionable in 2025?
Great question, Axel. What I would really say is invest in yourself. right? I've always gotten the biggest ROI out of investing myself. And what that means is investing in my health, investing in my relationships, investing in my education. We run a mastermind program with a lot of high level people. I spend almost six figures a year myself in different masterminds. And this is where you can really take massive shortcuts in your wealth, and really in your life, doing things right. So I'm a big proponent of doing that. On the health front, for instance, too, I work with a precision health doctor. We focus on functional medicine, and spend a lot on that. But I've had massive gains in terms of that. My biological age is 10 years younger than my chronological age, so always focusing on that, and that's what helps give me my energy, for
Yeah.
my clients and my family, which is huge. And then also, financial education, right? And increasing your financial IQ is really important. So a lot of people, for instance, like, we talked about the tax benefits of oil and gas. Most people don't understand that. Right. But when you start to spend some time, listen to great podcasts like this, read good books. We have a podcast as well called Wealth Strategy Secrets of the Ultra Wealthy. And, we're trying to constantly educate people on, whatever it might be around, you know, different tax strategies. Tax is a great example, right? And I know they're a lot higher in Canada, but, there's some people doing sophisticated things like setting up entities in the US,
Mhm.
driving income, reducing taxes. But just think, if you could reduce your taxes by 10, 15% a year,
Yeah.
right? That's massive, and multiply that by 10 years on top of the returns you can get in, real estate assets. That's
Mhm.
huge. But that comes with education, right? And I pay very little in taxes, but it's because I'm very actively involved and really learning that. So I think, the education is really key.
Yeah.
Those would be my 3 points.
I love it, man. I'm so happy and grateful that you said that because education is pretty much always my number one thing. Like before you go buy a property, before you make a move with your money, learn, train yourself. Like you wouldn't try to fly a plane without getting a license. So go learn. It's the bare minimum, and taking care of your body and mind is goes really a long way. So thanks for that. We're perfectly aligned on this, and you're absolutely right. Now, where can people find out more about you?
Yeah, probably the best place, Axel. What I wanted to do for your listeners is, if people were kind of enjoying the discussion, wanted to offer a free copy of the book. So if you go to holisticwealthstrategy.com, you can get a free copy of the book, and connect with us from there.
Beautiful. Let's do it. Dave, thank you so much for coming on the show today. It's been a real pleasure to have you on. I've been looking forward to this for a while.
Thanks, Axel. Really appreciate the opportunity.
And to everybody who's listening, again, share this episode with a friend who could be learning a few more things for 2025. Now go out there, invest in yourself, learn, make some offers. Thank you, and I'll talk to you next week. Bye bye.